am Deidre Quinn, and welcome to Pending and Trending, a podcast that started in real estate and grew into so much more. Here, we talk about the power of building wealth, creating opportunities, and designing a life that lasts for generations. With expert guests and real conversations, my mission is simple: to help you elevate your journey and build the legacy you deserve. Welcome back to Pending and Trending. I am here today with Freddie Rappina. He is a chartered financial consultant, accredited investment fiduciary, and the founder of Opta Financial. He works with clients on financial planning, building passive income strategy, and long-term wealth building. Freddie's also the author of Playing the Wealth Game, where he explores alternative approaches to building and managing wealth, and he is offering our listeners a free consultation today just for listening. So I'm here today with Freddie Rappina. I'm happy to be here. Freddie, what's the biggest financial hurdle real estate agents and other professionals and business owners face today?
It's an interesting question when you talk about real estate agents, because a lot of them, they do such a great job of helping other people build their wealth with making a real estate transaction. But a lot of them just don't take enough time for themselves and to look at what their goals are and what they're trying to do, not just with their business, but also with their families and their personal lives and their personal finances. And we found over the years that a lot of real estate agents themselves don't own enough real estate in a lot of cases. I think it's just one of those cobbler's shoe issues that we try to help mitigate a little bit.
Yeah, the shoemaker with no shoes, right? So, and it's so true. So, how did your background prepare you to help people through that and to build their own generational wealth?
I was a police officer before I was wealth advisor, and actually once around my 12th year, I decided to get all the licensing I needed and then start a small practice, and which while I was still a police officer, and I actually grew very quickly. So for about 7 years, I had two careers, and then switched over completely once I was able to fully retire. But just being around wealthy people really helped me understand a little bit more about how wealth is really created and storage of value and all kinds of concepts. And I realized that the middle class, working class, however you want to phrase it, was being force-fed a system that wasn't working in a lot of cases the way they wanted it to. Not that it wasn't working, but not the way people wanted it to. And I realized there were two different games. So I've came up with this kind of analogy of checkers and chess, and wanted people to understand that there's two different games. Not that one is right or wrong. It's just there are two different games. And I wanted people to understand which one they're playing and whether or not they want to switch.
I love that analogy. So can you directly relate that and explain the two different games?
Sure. Checkers is probably what people have already heard, right? Save a lot of money in retirement accounts, have 6 months of emergency funds, college accounts, a lot of saving for this one day thing out in the future, and a lot of sacrifice now for something better at a later time. That's definitely checkers. And chess is more about building strategies and different income streams now so you can enjoy life now as well in the future. And you can be completely happy playing checkers. And if you're going to play checkers, I want people to play checkers well. But if you're feeling like you're not getting ahead, or no matter what you do, you're doing everything the proverbial they are telling you to do, and it's just not moving forward and not going the way you wanted to, let's look at the other game called chess and see if those strategies are going to be more for you and for your risk tolerance, and just a different way of looking at it. It's very difficult to become wealthy playing checkers.
What would you advise somebody as their first chess move?
The first chess move is the mindset, no doubt about it. It's the mindset. Some people are even hardwired. It's hard to jump over the mental hurdle of going over to chess for some people. For some people, it's very easy. But I would say the attitude towards debt is going to be the biggest thing to understand and to implement if you're going to switch over to chess. Checkers is your debt is like the enemy in checkers, where you want to be all out of debt, have everything paid off, using a lot of good checker strategies. But for chess, you want to be in as much debt as possible without over leveraging, and you're viewing debt as a tool to help you accumulate more wealth, not as an enemy. It's more of a friend. So it's there's a very big distinction on the attitude towards debt in whether you're playing checkers or chess.
So once you get them past that mindset, they're there and they want to make that chess move, they're ready, they're like, okay, you know what, I'm ready to invest, I'm ready to change, I'm ready to start creating that cash flow. What's the next move that you recommend, or the options that you give them?
The first thing to make sure that they're mentally ready, of course, I said the mindset, the first thing is. The second thing is actually being financially ready, because there's a lot of people who want to play chess that shouldn't. They haven't mastered checkers yet. They don't have a good foothold. They don't have the basics down, or they don't have the resources in order to take on debt. That is it's a strategy where you don't take on debt and not know how you're going to pay it back, right? You having the resources first and then taking out the loan to be able to buy a cash flowing asset, such as a piece of real estate or a business too. But I know we're going to talk more about real estate, so I'll stay there. That piece of real estate, which is going to service the loan and put cash into your pocket every month, that's when you're there, when you're able to show a lender, look how much money I have on a paper, here are all my accounts, but I don't want to use my money to purchase this piece of real estate. I want to use your money. Please go in that back vault there and pull out a bunch of money for me, and we're going to go buy this piece of real estate, and I'm going to pay you back with the money that the real estate generates, not what's here on these pieces of paper. Of course, there's going to be down payment and other things, but that's the general idea, is being able. Now, you can pay the bank back with your money. You just don't want to. You want the asset to pay the bank back.
So basically, it's just it's just how agents advise their clients in a lot of cases. You want to purchase a rental property, you're going to get a tenant in there. The tenant's going to pay this much. It's going to cash flow. You're going to pay the mortgage back, and you have excess after paying all the bills left that's coming in. Are there other vehicles that you recommend other than real estate? And would it just be rental properties? And what are the different types of properties you would recommend if it is just real estate?
When it comes to real estate, it's up to the person, right? It's up to the individual, what they're comfortable with, and also the amount of debt they're willing to take out, right? So there's the difference between debt capacity and debt tolerance, right? So debt capacity is like more of a number, right? This is realistically what we could do. And then there could be debt tolerance, which could be a number within that number. So that will dictate what kind of real estate's even available for you, if at all. So then, but you also asked about other vehicles. Businesses also can create income flows, buying a business, whether it be absentee or semi-absentee, in addition in your audience being mostly in real estate. So in that number within the number can be what people are comfortable with, and still be able to go and purchase that business, that piece of real estate, something that's going to cash flow for them. But cash flow is a big part of this, because cash flow is what people are going to use to pay for, like in my case, travel baseball and competitive cheer competitions and all the other things that my kids do, right? So it's the cash flow that's important, not just saving and saving and not having money to enjoy your life now.
Absolutely. Absolutely. We know all about those big cash flow payments too. So what economic trends should real estate agents and entrepreneurs watch out for right now to protect their assets?
I would say just sticking to a good system, regardless of what's going on. Always sticking to a good system where you are investing in the market, you're investing in market-based assets, your paper assets, and then using the leverage to purchase other things that are going to create the income, but not getting caught up in noise, not getting caught up in is the market going to go down and up. Especially in real estate, I'm buying real estate whether the market's up, whether the market's down, whether the market's sideways. I honestly, because especially if someone's buying single family homes, investors buying a lot of single family homes, I kind of like it when the market's flat because then the house
Absolutely.
next to the house I just bought isn't going to appraise for 20% more or anything like that. I'm going to be able to buy that house too when next time I'm reloaded. And so I kind of like a flat market, and it also depends on your investor, right? Some aren't interested as much in capital appreciation as they are in cash flow, right? And that's another thing, people really get too wrapped up in capital appreciation. The buy low, sell high. This is going to be likely worth a lot of money in the future, or it's always the future, right? It's, in my opinion, in real estate, you want to talk about how much cash flow is this going to bring in right now. The appreciation is great because later you can refinance and be able to get some money out of the real estate so you can purchase more real estate and create kind of your own little system there. But I think people get too wrapped up in capital appreciation. I would say leave that more for the paper assets, for the market-based assets, not so much in the real estate.
Right. Now, so this is something that I feel like our schools fail in. We teach all these different classes, but we don't teach wealth. We don't teach finances in school for the most part. What financial lesson should we be passing on to the next generation so that they can
Well,
win the wealth game?
yeah, how to become wealthy. I think like my son just took a high school personal finance class this year, his freshman year, and I said, "How's the class
Love that.
going?" And of course, I'm a little bit nosy about that class, right? All the other stuff. I'm
Yeah,
like, okay,
right.
but his reaction to it was very poignant. He said, "Dad, it's teaching people how to live broke instead of how to become rich." And now, his high school does have a personal finance class, which is like a step above like most other
At
schools that
least
don't have anything, right? So I'm not bashing the
that's right.
school with this comment. I'm just saying that we need to have a good conversation with kids on how to produce value because money just follows value, right?
That's right.
And how to store the value and how to multiply the value. Those are the steps, right? Now, how you do all those things could be a matter of style, a matter of opinion, a matter of a taste. Could be a whole lot of variables in that. But understanding that's what needs to be done is very important in my opinion. And like Scrooge McDuck in the 1960s explains it in a cartoon very well to Huey, Dewey, and Louie, the little nephew guys. And like it's right on point. It's a lot of decades ago, but the principles are still there. So just having people understand how wealth is built and how do the rich continue to get richer, right? Instead of screaming at the moon, well, how about you start taking some steps to implement some of the strategies that they use? Now, you may not be doing it on the same scale, right? But that's okay. And that's something I really want to put bring to light with people is it's okay not to play the game on the same scale as the Elon Musk and Jeff Bezos and everybody else up there, right? But you can play, and the tax laws are available for everyone, except some that require you to be an accredited investor. But for the most part, the tax laws are built for you to mitigate your taxes, to not pay as much in taxes, to improve your wealth.
Right.
not the other way around. So if you see the taxes as an enemy, tax code as an enemy instead of a friend, I would challenge you to rethink that.
Very good. Now, you're the author of a book, Playing the Wealth Game. Is that right?
That's right.
Would you like to tell us a little bit about the... Oh, there you go. Tell us a little bit about your book and where our listeners can obtain a copy.
Sure. I wrote the book as I wanted to be like more of a self-discovery book. I wanted people to not only understand the two different games of checkers and chess, but I also wanted them during the book to decide who they are, right? Am I a checkers player? Am I comfortable? And if I am a checkers player, am I comfortable being a checkers player? Or am I a checkers player because that's what I've been told all my life? And even though I would love to be a chess player, I need to mentally jump over some hurdles. Or am I a chess player at heart and I want to start playing chess? Do I have, again, that good foothold to start in those strategies? But I didn't want to say anything was right or wrong. You can be perfectly happy playing checkers. You can save a whole bunch of money, have a good retirement, have a nice life, see the grandkids, all that good stuff going on nice vacations. It's possible to be very happy playing checkers. I'm just saying that you're likely not going to be able to obtain the wealth that a chess player is able to obtain. And we know that instinctively. I live in Tampa, and if you walk down to the boat show here in Tampa Bay and walk up to somebody with a $25 million yacht and ask them how they obtained this $25 million yacht, they're not going to say, oh, I fully funded my 401k, right? Or I bought a well-diversified mutual fund and sat on it for 30 years. Like, those aren't going to be the answers, right? So we know it instinctively, but the checker system that the finance companies really like selling, especially to the middle and upper middle class, because it brings them in a ton of money, and they play chess with it, and they're buying the real estate, they're buying the businesses. Heck, we just had a law passed that they can't buy X amount of real estate. Because they're buying up all the single family houses. So, but understand like how what they're doing is not wrong. And it's just a different game. But those games are available to everyone, and that including, including people that are making, good 6-figure salaries, and saving a whole bunch of money.
That's great. I look forward to reading your book, and our listeners can get that on Amazon, Barnes and Noble.
Yeah, Amazon, Barnes and Noble,
great.
wherever you get books, it's likely going to be there.
Perfect. And now, to our listeners, I understand you are going to be offering a financial consultation with you personally. Is that correct?
That's correct. Yeah, sure. We offer complimentary consultations. No obligation. It's just more of an interview style to make sure that we would be a good fit for you in your situation, and you would be a good client for us. And we want people that want to become wealthy. Like they have that desire, right? And they are, of course, sometimes willing to do things they don't want to do in order to get where they want to be, which in my opinion is the mindset that all successful people go through. So yeah, we offer that to people, and they can go at our website, optafinancial.com, click on the schedule a consultation, brings you right to the Calendly link. And, we look forward to talking to people.
That's great. Thank you so much for being on today. I appreciate you taking the time.
Thank you. Appreciate it.
A huge thank you to Freddie Rappina for joining us today and challenging us to think differently about wealth. Whether you're playing checkers or you're ready to start playing chess, the biggest takeaway is that building wealth starts with mindset, strategy, and creating income streams that give you more freedom, both now and in the future. As always, thank you for tuning in to Pending and Trending. I'm your host, Deidre Quinn. Until next time. Thanks for tuning in to Pending and Trending. Remember, generational wealth doesn't happen by accident. It happens by action. If you liked today's episode, share it with a friend, subscribe, and let's keep elevating your journey together.